Hello traders, welcome back to the channel. This is Vishal. I hope all of you have been enjoying the long weekend and probably ready for tomorrow's market. Now in this weekly sectoral analysis video, one interesting thing is visible that in Nifty and in Bank Nifty, both of the important indices, we have a hammer candle which is visible. Now after this very sharp fall in Bank Nifty, especially in comparison to Nifty. The fall in Bank Nifty has been very sharp. Suddenly there has been a hammer, and even in the weekly time frame charts, we have a small wick on the downside. So probably many traders would be, thinking that maybe we have a bottom or something in place. Well, we need to understand that as a trader, just one candle cannot change the entire trend. Understand? So let's do some in-depth analysis about the same. First thing is, if I have a look at the weekly time frame chart, the trend is obviously up. We can also see that there has been bounce back in this entire trend, especially somewhere over here in this candle, because of this 23.6% Fibonacci retracement, which is at 21,350, 21,356. In the daily time frame chart, we can see the trend is flat. It's not up. And if I just have a look at the hourly time frame charts, things do not look very pretty. The reason is I had shared the resistance level in my previous Nifty and Bank Nifty short-term view. I clearly told that if Nifty tries to pull back, this entire resistance zone will give a hard time to it, and it will be an immediate short-term resistance. So when this Nifty tried to pull back from 21,140, we saw a resistance at 21,400, and suddenly we had a fall till almost of 190 points in intraday. Then when once again we saw a pullback at 21,477, from there we again saw sharp correction in intraday till 21,248. So you can see that this zone, the coordinates are 21,477 to 21,322. This small short-term resistance is certainly providing some resistance zone to the Nifty. Now, first of all, if Nifty wants to go higher, it needs to surpass this entire resistance zone and probably close above 21,530, 21,550. Only then some upside momentum will be visible. But we need to understand one thing very clearly in Nifty and in Bank Nifty. If the pullback happens, it may not be very smooth because we have some short-term resistance here. Then again, we have a gap here. So maybe even if the pullback does occur, you'll have to go a little bit more stock specific. So summing it up all, we need to understand that first the pullback should happen. It should sustain. It should surpass the important zone of 21,530, 21,550. Only then we will be able to come to the next analysis, and then we'll take forward from there. Bank Nifty. Now Bank Nifty is in a pretty bad shape, but the good news is that now it is trading somewhere at a support zone in the weekly time frame chart. Especially this particular gap was a support, and from somewhere around 46,000 till 45,000, it was a decent support. But somewhere over here, when this particular support was broken, you can see Bank Nifty tried to go further down. But when it did try to go further down, what we did actually see that we do have some sort of small wick on the downside, which means some sort of pullback is probable. I'm not saying it will happen, but it can. And which are those stocks? I'll come to that later on in the part of this video. But this is just a probability, not a surety. And again, we do have hammer over here, but again, just a hammer cannot change the entire trend. Now, if we have a look in the hourly time frame charts, again in my short-term Nifty and Bank Nifty short-term view video, I clearly mentioned this entire zone of 45,729 to 45,266 will provide a resistance zone in the short term for Bank Nifty. And somewhere over here at 45,484, there was a sudden sell-off in intraday, and from 45,484, we saw a sell-off of close to 600, 700 points in intraday. Pretty sudden, right? So again, we can see Bank Nifty is trying to head towards this zone. It needs to be seen how Bank Nifty will tackle it. If it closes above 46,000, maybe some more run up in the bank nifty in the short term will occur. But we need to be understanding one point, that even if we do surpass 46,000, it will be just a pullback. And again, you'll have to go more stock specific because the chart of bank nifty has been pretty much distorted. And if you want to just trade in nifty and bank nifty, maybe it will be better into trade in extreme shorter term charts for time being. Now looking at PSU banks, I guess we can say that the trend is strong, and more or less the stocks are looking fine. There is one stock which I can say as of now is Canara Bank, is looking pretty strong over here, and there is a decent possibility in the short term that it might see a upside momentum. Now looking at the private banking pack, yes, this particular sector is responsible for the entire markets to come down. Now over here, again, we are trading at a decent support. We can see this 78.6% Fibonacci retracement. Yes, this is a decent support, not a very strong support, but yet it is one. Now, if we look at the main culprit, HDFC Bank, which is responsible for everything. Now, suddenly HDFC Bank, first of all, it is not just oversold, but it is also overstretched on the downside. Understand, oversold and overstretched is totally different thing. So some sort of consolidation, and if we have a pullback, it will be icing on the cake because it is trading at 127.20% Fibonacci extension. So maybe a pullback or a consolidation is probable, and we also have a hammer candle in the weekly time frame chart. All right, but resistance will kick in at 1499 or 1500 levels. Do not forget that. One more stock which I can see, it is one of the biggies in the private banking pack. It is consolidating as of now, ICICI Bank, and just as a short-term momentum trader, maybe who is just trading for 1 or 2 days, maybe you might see some sort of pullback happening in this stock in the next few days. Energy pack, I guess energy pack is strong. The momentum is not very strong. The trend is strong. And as a trader, as a swing trader, I would like to stay away from this particular sector. Yes, if someone is holding the stocks from lower levels, you can continue to hold them with a trailing stop loss. But initiating new trades is not my cup of tea as of now. I would wait and wait for a better risk reward ratio. All right, metal pack. Now in metal pack, we need to understand that the trend was strong and suddenly they have corrected pretty nicely. So as a swing trader, yes, you can find few stocks. I'll just share one stock. There are few stocks which are looking nice. But one of the stocks which does look nice is SAIL. You can see how nicely the stock has tried to come out of its consolidation, especially the shorter term time frame chart. You can see over here, it's trying to make a double bottom trend line breakout, if you can see visible in the RSI, and how nicely the breakout has happened, right? So some sort of short-term momentum on the upside is visible in the SAIL, but just be careful that result season is going on, and we do have a result coming up on 8th February. So be very, very careful about that, because I always believe in result season. When a particular stock is nearing to its result date, it's always wise not to trade in derivatives, especially in options, because a gap up, gap down can suddenly, result in lack of liquidity in that particular strike price. Okay. Autopack. Now in Autopack, I guess some sort of consolidation is going on in the last 1 month. You can see last 4 candles in the weekly time frame chart just trying to move around in one zone between 18,854 and possibly 18,132. Now there is one stock which is not been performing, and this is Maruti. As of now, it's not looking that great. I can completely understand, but if the entire auto pack starts performing, as a positional trader, one can keep check on the stock. Finance pack. I guess finance pack needs to be reanalyzed after a few days, because it's very much similar to the private banking chart. If the private banks and the finance stocks try to give a pullback, and if this low is not broken, if this low is broken on a closing basis, obviously we'll go lower, And if not, if this low is not broken, we might try to consolidate, or we might try to pull back a little bit on the side. Consumption pack trend remains on the upside. Post consolidation, if there is a breakout, we might see some upside in these stocks. FMCG pack. Now in FMCG pack, I can say that substantial amount of correction has happened in the daily time frame chart, and it seems that they are at a good place from where pullback on the upside is probable. Even if you have a look at the hourly time frame chart, you can see multiple times FMCG sector came down, it went up, it came down, it went up. Generally, when this happens too many times, sort of short-term bottom is probable. But again, you'll have to be very, very careful when you're picking the stock. Stock selection is extremely important. Infra pack, I can say that it's trying to ignore all the warnings which have been given by the momentum indicators that the momentum on the upside is waning, it's getting weak, and the trend is in complete control. In fact, the weekly RSI is at 85.68, way overstretched than normal scenario. So yes, as a trader, if you're holding any infra pack stocks from lower levels, you can continue to hold them. But as a trader, as a short-term trader also, I would not like to initiate any trades in this particular sector as of now. I would wait for sure. IT pack. Now, IT pack has gone up, especially in this move, or what happened in Infosys. We all have witnessed that. So due to this sudden run up, I guess IT pack needs a little bit more consolidation. And once that consolidation takes place, we will come to a next leg of analysis. As of now, I don't want to say anything about the IT pack. Pharma pack as of now, it looks to be strongest, and it continues to remain in an uptrend. If you remember, I had spoken about the stock Cipla since a few days back, that it has given a decent breakout, and we saw what a decent gap up it gave. As a swing trader, you can say that it is at an inflated level, so not a very good time to take entry. As a positional trader, if someone has bought at a lower level somewhere over here, then yes, you can continue to hold with a trailing stop loss. But some sort of profit booking or consolidation in short term, just in short term, cannot be ruled out. But overall, the trend stays positive, seems as of now. Now, there is one more stock, Dr. Reddy. I had my eyes on this particular stock since long, and it seems that it has provided a decent upside momentum in the short term, and possibly the momentum in this particular stock might continue to go up, especially if it closes above this particular level, 5972. PSE stocks, we can clearly see way overstretched. They are trying to ignore all the warning signs by the momentum indicators, which are clearly giving them a sign that the upside momentum is waning. But the trend, sometimes what happens is that the trend is more stronger than the momentum. That is what is visible in the PSE stock. So as of now, not interested in any new positions. As a swing trader, I would like to wait for a better risk reward ratio. Real estate. Real estate as of now in the weekly time frame chart looks extremely overstretched. In the daily time frame chart, yes, it seems that the real estate stocks have come down, and you can find maybe one or two stocks for your short-term trades on the upside, but be very, very careful about your stock picks. Okay. Mid cap. Now in mid cap, what we can see is again same scenario, that all the warning signs given by the momentum indicators are being ignored, and the trend continues on the upside. As a swing trader, I would like to wait for a better risk reward ratio, and probably only take entry when the stock dips a little bit more, the index dips a little bit more, only then I will start looking at the mid cap stocks. And summing it up all, I guess you might have understood that very, very less amount of stocks are looking, mouth watering as of now, with the context of a swing trade. And again, we have a budget coming up on the 1st of Feb, and still more few results have to be coming up, and result season combining with budget can result into some volatility. So if you want to stay away from any of the stocks which are do have results coming up in the next few days, it is totally wise, because in the last couple of months we had a pretty nice rally where all of you must have made money, right? And probably it's time to safeguard your money. But yes, if you want to initiate one or two trades just to be in the market, just to stay active, that is absolutely fine. But just be careful that do not initiate a lot of trades, especially in the derivative section, because if there is a result coming up and if it gaps down, just like Infosys or HDFC Bank on the other side of your trade, you can fall into problems, right? Trade less, trade wisely. Thank you.